नमस्कार। फिर पैसा बोलता है में आपका स्वागत है। वेलकम बैक टू पैसा बोलता है। मैं आज एक ऐसा कंज्यूमर कंपनी के बारे में बात करना चाहता हूँ जो दक्षिण से बहुत पॉपुलर है। ये तो चेन्नई से आया हुआ है, उस दिन उसको मद्रास कहते थे। ये तो एक मद्रास बेस्ड कंपनी है, लेकिन ये सारे भारत और विश्व में प्रसिद्ध है। इस कंपनी का निर्माण सन 1928 में हुआ था और वे पहले सनलाइट सोप को डिस्ट्रीब्यूट करता था। टुडे आई एम गोइंग टू टॉक अबाउट एन इंडियन कंज्यूमर ब्रांड which is from South India. This company was incorporated when Chennai was known as Madras in the year 1928. They started as distributors of consumer products, especially Unilever's Sunlight soap. Today, nobody remembers Sunlight soap. This company has become extremely big. This unit of that group is called TTK Prestige. This makes consumer products such as cookers, gas stoves, and mixer grinders. But the mainstay was pressure cookers. This company is today run by a man called T.T. Jagannathan. T.T. Jagannathan did not want to come and run this company. He was a student of the IIT Bombay and wanted to go abroad for his studies. But his elder brother had passed away and he had to take the mantle. The company was in serious trouble and had borrowed from private financiers. He came in, he took that company and he turned it around. Today he is based in Bangalore, though the company is headquartered in Chennai. He, along with his cousins, runs TTK Health, another big company. Revenue mix is 31% pressure cookers, 16% cookware, 13% gas stoves, and 10% of mixers and grinders. Domestic sales happens to be 98%, exports is 2%. This company is the India leader in pressure cookers, in non-stick pans, and also kadais and tawas. This is a premium end of the product and is sold to high end people. There is a lower end product. The company which mirrors the lower end of this product is Stovecraft, that we will discuss some other day. But the company in 1990s used to make pressure cookers and non-stick cookware. But what happened was the pressure cooker which they initially had did not have a safety valve and used to burst. Jagannathan's genius was in designing and patenting a safety valve for this cooker, which made sure this cooker would not burst, and therefore this cooker became a household name. And his grandfather was T.T. Krishnamachari, and thus it was a well-known brand in South India, and it became an all-India brand. This, in between 2006 and 2010, the company transformed itself as a total kitchen solution provider with cookers, microwave pressure cookers, cooktops, and the whole range. But again, this remains a premium brand, and in 2010, it tied up with lot of top end global brands. In 2018, it launched water purifiers, and in 2019, it launched a Swatch brand of pressure cookers. It has 5 manufacturing units and 2 R&D units. The manufacturings are in Hosur, Coimbatore, Karjan, Roorkee, and Karedi. This is distributed all over India. It has a huge distribution network. It has 665 prestige exclusive stores. It has 504 service centers where the product service when come for repair. The company has a overseas subsidiary as of 2016. This is called as TTK British Holdings. The capex that the company has spent is 42 crores in FY 21-22 and is estimated to spend in 23-24 another 70 crores. It has about 700 crores in cash and liquid investments. The current market price of this share is 714. I have been looking to buy this stock for a very long time, and this has been its high 1051 and it has corrected nearly 40%. The reason for the correction is because of the K-shaped recovery in the Indian markets, sales have started to decline. And because sales have started to decline, the stocks began to correct. The stock corrected in recent times to 632 rupees. I got it around about 660. The promoter owns 70% of the company. The debt is negligible. FIIs own 9%. Domestic institutional investors own 14%. Public owns 7%. The company has given 23 dividends since 2001. That means there is a regular dividend giving exercise. In May 2019, there was a 1 is to 5 bonus, and in 2021, there was a 10 to 1 split. So if you had bought it, you would have got a 1 is to 5 bonus. That means you would have got a 20% extra shares. So your 100 shares would have become 120, and then you would have split it and it would have become 1200 shares. So 1200 shares, you assume 700 rupees. 1200 shares at 700 rupees is well in excess of 8 lakhs. You would have received a lot of dividends. The company I have been tracking for a long time, unable to buy it because of its fancy valuations. Thanks to the conditions in the Indian market, it has reached a position where you can buy. Anytime it cuts below 700 is an opportune time to buy this stock because this is a very strong Indian brand. It is not only that this stock sales have come down, even in the lower end, sales has come down more rapidly, and that company's Stovecraft has corrected even more than this company. We will discuss that company in great detail at one point. That stock had corrected 50%. So, this is an area of great interest because once the consumption picks up in Indian market, this company is bound to do well. So the longer the company stays in the lower rates, it's a great time for us to buy this stock. This stock is absolutely debt free, very, very, very negligible debt. And the promoter holds 70%, and he is not going to let go of the company. It's a traditional company and is growing slowly and steadily. If you invest 7 lakhs, it will not give you 70 lakhs. But definitely, if you buy at the lower end, you can expect a 100% gain within 5 years, and this is not counting dividends. And since this is a consumer stock, you can expect a steady growth. And since there is no debt, you will not find this company sinking. The EPS of this company is around 20 rupees, and so even if it remains at 20 and it goes back to its old level of 50 times earnings, you will get 1000. But I think EPS will grow over 5 years and it will hit 30. If it hits 30 and the market takes a fancy, it can go up to 1500. So, this is my rough calculation that if you are very patient, within 5 years, you can expect a price range of anywhere between 1250 to 1500 plus dividends. So, this means that you have a good brand, you have been able to buy it because the market thinks this stock is weak because sales is weak. What the market does not understand is sales is weak because the economy is going through a K-shaped recovery. Thank you for watching Paisa Bolta Hai. I hope you like this content. If you like this content, hit the like button, press the subscribe button of my channel and turn on the bell notification. If you do not turn on the bell notification, you will miss out on a video. Once again, I thank you for your support for Paisa Bolta Hai.